couple of questions here. These ones dropped in a couple of times here. And the first one was just asking, if one wasn't required to prepare audited financial statements, should one still go through the trouble of complying with these standards? The question dropped in a couple of times. It's for both of our panelists, but don't know where, Stephen, perhaps you want to lead us off, and then we'll hear from Alison.
Yeah, I think the answer is lease accounting is kind of like cash versus accrual accounting. It is not a policy that you can just say, I'm going to ignore this, because it's so fundamental to the material in most statements. So I would say that it's important that you adopt the policy and you modify your accounting process.
Thank you so much. Alison, anything to add?
I mean, I've gotten the same question internally from my accounting group, and they basically said, we don't follow GAAP. So it's a choice, but I agree with Steve.
And this last question that we'll close with here, I don't know who wants to have the first run at this, but how does materiality figure into what one needs to do for lease accounting purposes?
Well, let me take a shot at that. Materiality, of course, is a complex issue, particularly for public companies. The SEC's issued some thoughts on that in a staff accounting bulletin, but materiality in something like this has to be thought about both short-term and long-term. And typically, just because maybe it's not material in the short term doesn't mean that it's not something to ignore, because the long-term liability or the long-term effect, it may well be material. When you're doing audit work and as a company, you've got your own materiality standards and policies. So I just encourage folks to look at Staff Accounting Bulletin 99. The SEC gives for some conceptual thoughts, but also talk it over with your auditors, and remember, it's not just a short-term decision.